Hey, good morning, traders. Be sure and like my video if you like it. I'll get that to the beginning. Comments below are invited and appreciated. I will be putting in the comments area my Discord. If you guys want to join my Discord room, it's all free, and we do have a Slack room, but I'll need your email for that. It's actually tends to be more active over in the Slack room than it does in the Discord. Um, but some same things going on here, and we encourage people to post their ideas and stuff in those rooms because we want to share the information and get some ideas because we work together to make money. Okay. Okay. Bottom line is what I'm seeing this morning. I know it looks like a lot of stuff on my chart here. Okay. Uh, so what I'm really watching here, I got the volume profile on my chart today. Okay. A couple things I want to takeaways I want to talk about. First of all, this 200-day moving average, simple moving average on the 4-hour time frame. Okay, we have hit it twice this week, so we've already hit it twice this week, and we have not been able to break through. Okay, so that's one big takeaway that I want to go here. We are at the 50% retracement of this lower high to lower low. 50% retracement. Okay, this can act as a bear market rally high. Okay, this can very well be the apex of a bear market rally high. So be very mindful of that. So this area, this right here represents the 50% retracement from all-time highs to this recent low. So we're right in this zone. Okay. The only problem I got on all this is the fact that we are basing below the 50%. Knowing that there's another 50% retracement above it, we should be basing at a higher level, in my opinion. And we're finding rejection before, in my opinion, at a lower price point than we should actually. We should actually be basing a little bit higher, in my opinion. Now, if you go up here on a 2-hour time frame, and I want to some things that I can point out right here. Where's it at here? 2 hour, there it is. Okay. And we'll zoom in. Okay. And some little takeaways that I want to have going on here. So you see, first of all, you see the slope of the 200-day moving average on 2 hour. So what we got going on is we got a declining 200-day moving average that we've tested twice. We tested it here and we tested it here on the 4 hour. Okay, and we rejected both times. Okay, so we've got a lower high here compared to that one, but it rejected the 200-day moving average on the 4-hour time frame. So what we got going on here on the 2 hour is, you know, we have switched to an upward sloping 2 hour because we've been consolidating in this area and the 2 hour is upward sloping. So right here on that date, if you put a channel, start a channel right there on that date. We'll just put this on here real quick like. And we'll just put a channel right here on the slope. And we go to the top of that move. So this move right over here. See that high right there? Okay, you see what we're doing? Now, shoot. Let me extend it out here. Activate. Go right here. And this is what I want to point out here, right now. You see how we are just barely, we are hanging on right above. And this has happened. Um, we looked below yesterday. Early on yesterday morning, they came right back up here. They're defending it with for all they possibly can. They're trying to defend this downward channel. We're trying to base right above this downward channel going into today's session. So that's just quite mindful. What we're also seeing is, like I said, we got that 200-day moving average above us. This to me, because we've had such a big run up, it looks to be a lot of distribution happening up in this upper price point. Every time we get up into this upper price point, we have a lot of distribution. So you don't know if it's accumulation or distribution, but it's just a takeaway. Today we kick off the hard earnings season. We got Netflix, we got Tesla. It's all kicking off today. So earnings season is going to get just ignite today. So be mindful of that also. Uh, So that's a couple things I'm looking at here. So they're trying to keep us in a bullish posture versus the trend going into the big news events tonight. So that's what I'm seeing early on this morning in this posture. Uh, so even with very strong retail data yesterday and retail sales data, they're still doing their best to defend this higher distribution area here on the weekly. So, just a big takeaway here that I'm looking at here. This white line right here. If you go down on the, these are the weekly. This is your weekly webs profile, and that white area for the past 2 weeks has been acting down to 1 hour real quick. Uh, that white area right there. That's another. It's really giving you a pretty good tail here. Uh, so 4 weeks back, we're holding above the profile. We had this breakdown. We're holding right above this profile right here, that white line. This was our breakdown. Okay, so this is like a cup and handle. So we're trading right there. If you zoom right in there, this was the breakdown, cup and handle. So are we breaking out? I don't know. I mean, I just want to point that out. So look at where that white line is right there. So we are absolutely at the apex of indecision. Uh, are we? Is it an actual up cup and handle? Are we going to fall back down? I don't know. They are doing their best to support a handle scenario right here so far this week. I don't know. I just thought, some quick takeaways that I'm looking at right here. So, it does look to me like, um, uh, uh, see, yeah, we got a very strong trend on the 200 here on the 1 hour. Um, so it does look like to me that they're trying to put in a cup and handle pattern for a potential breakout. And if that were the case, of course, if this is a cup and handle, okay, that being the cup and handle. So uh, your cup and hand, you could measure your cup, your handle area. So you're projecting out now. If we break out of this handle area, we would be projecting a move up here to 45.05, and that's the beginning of this breakdown pattern. So that's what we would be projecting to the upside. Now to the downside, remove drawing. You'd have to first get through the bottom of your cup, okay? But yeah, we would. This move is technically cup and handle with a potential move to the 45.05. We have a trend right here that lines right up, pretty much pretty close to that. See that trend right there? If you go out here on the daily time frame, I can put the daily on there. We'll see where that trend comes from. And see this trend right here? That would put you up in that 45.05 area. Um, if we were to break out of this cup and handle to the upside. So just a few little things, little takeaways that I wanted to talk about in the S&Ps. Okay, 1 second here. Okay, some quick takeaways on the NASDAQ. Excuse me. So we're currently trading, see the heart, the distribution from last week. We're currently trading below that. So we had higher distribution coming into these numbers from last week into tech. Tech is holding the entire market up. We have a massive divergence between the rest of the market and its valuations versus tech here in the U.S. on U.S. equities. Massive divergence. Uh, Pundits in the market say, "Hey, we're 30 times earnings." They're still not that expensive. Okay, I don't know. I just don't know. All I know is on a worldwide basis, the tech is more expensive here in the United States than anything else in the world. So just be mindful of that. So we got the 200-day moving average on the 4 hour. What happens if we put a little channel on this and then we'll zoom into it? Okay. So we got that right there. Put a little channel on that. Right there at that 200-day moving average. Okay, and then I will zoom in real quick. Okay, this is what I'm getting at right here. So this is the channel right here. Okay, here I can change the color of it. That way you guys can see it a little bit better. Make her green, I guess. And let's widen it up so you can see it better. There you go. So what we got going on here. So we had higher distribution last week. We are putting in a lower distribution so far this week going into the tech numbers tonight. So we got weakening momentum in theory. Okay, we don't know. The week can end higher. I don't know. But we are going into the numbers a little bit weaker. And so what I want, my main takeaway, we have some bad data out of Europe on ASML, which should weigh on semis today. We'll see what happens here. So it looks to me, and we're uh, right here already, almost right at support, critical support already this morning on the Nasdaq, in my opinion. This 15,150 area, very critical area. So so we're 40 points away from very critical support this morning here on the Nasdaq. So just be very mindful what's going on here. That we have even so far into not this morning session, we have not even come up into this higher distribution and back tested. So be very mindful of that. See, we have a breakdown, critical resistance. We haven't even come back up to it and tested it. So we just have to be very mindful of that. We look below this 50-day moving average on the 4 hour has been acting as support. We broke it yesterday, but we came back up and we saved it. Now today, this morning, we're already back below it early on this morning. So be very mindful of that. Another quick takeaway: the S&Ps are consolidating and stuff. Uh, the swing high versus the lows, they are the S&Ps are consolidating below the swing highs, giving it actually a more bearish tone. The moving averages look better, but where it's consolidating is a little bit more dangerous, in my opinion, on the S&Ps. Whereas the Nasdaq, it's consolidating right inside of the swing high, 50% retrace, and the all-time high, 50% retrace. So you get where it's consolidating is a little bit more bullish in relation to that, but technically the moving averages are looking more bearish. So be mindful of that. Once the 2021 broke the 50, that was acting as a new um, uh, high for the week. That was acting as a new once we broke this moving average combination. And look at this morning. We got the 50 and the 20 all pointing downward this morning here on the 2 hour time frame, suggesting weakening momentum. And we're like I said, compared to last week, we're into a weaker volume profile scenario going into today's trading session. So this is acting quite a bit more weak versus the S&Ps. Be very mindful of that. So some quick rundowns, real quick. Nvidia is back trading under critical trendline support this morning, so be very mindful of that. Nvidia could be, we are outside the expected market maker move low for the week, and some very important VWAPs. We are breaking some very important levels here on NVIDIA. Even I'd only be looking to bearish side here early on this morning. You got AMD, very, very important. The 104 area. You're about 30-40 cents away from a very, very important level here on AMD, potentially breaking this morning. So definitely keep that one on watch. You got Apple about 60 cents away from a very critical. We looked below it yesterday. They saved it. You're only about 60 cents away from a very critical support on Apple. So definitely keep that one on watch going forward here. We are below last Friday's close on it, so on the bearish side of trend. Yeah, you see how this thing comes right down to this area down here. the 174 area. I think the door is wide open, potentially wide open for a move back down to 174 this week. And real quick, like, I'm just going to go stop with this one. It's getting a little bit long in the video. So we pushed out above a wedging formation on Microsoft, closed above that yesterday. But we are below a 3-year point of control. So this is a strong accumulation distribution area here on Microsoft. So, this is typically what you say when you see something coming in from the underneath side, breaking above trend. This is your atypical bear trap scenario. So be very mindful of that because this is a very extremely strong, a lot of volume here, where buyers and sellers are fighting it out, quite, you know. So, just because you're breaking above trend does not mean it's actually a bullish pattern. A lot of times you have to know where the volume is hit versus price. There has already been massive amounts of volume at this price point, suggesting this breakout is actually a much higher odds failure rate than breakout fit rate. So be very mindful of that. Okay, guys. Like I said, please share my videos with other people, and I really appreciate it. If you can retweet them on Twitter, I'd appreciate it too.